I'm Devlin Steele, Director of Education at Augusta Precious Metals, and this is a Touchpoint Update. As always, remember to like this video and subscribe for future updates. In case you haven't noticed, the economic environment has been very fertile for gold and silver over the past few years. And now, there's yet another economic factor that could push gold and silver even higher. President Biden last month announced he would seek a historic increase in capital gains tax. He wants to see the top rate effectively doubled, from 20% to 39.6%. That's for households making $1 million or more annually. Why do we care? Because the negative impact of a capital gains tax increase like that on financial markets could be substantial. Bad news for the economy is often good news for gold and silver. In a climate where interest-bearing assets such as equities are not doing well, long-term savers often see gold and silver as having more potential for growth. The leap in capital gains tax that President Biden has proposed is unlike any we have ever seen. The near 100% increase from the current rate is the biggest single jump in capital gains tax in modern U.S. history. In my mind, how could it not have a negative impact? Gold and silver are what people often refer to as a risk-off hedge asset. When markets sink, it's not uncommon to see people flocking towards them. Have you ever wondered why the precious metals bull market has been sustained for more than 2 years now? I think it's largely because of the heightened economic uncertainty, along with expansionary monetary and fiscal policies, and really a sort of economic soup of risks and threats that influence what you can earn with your savings. You hear me talk about this all the time. Who knows? If we end up seeing a combination of inflation, interest rates near zero, continued high levels of spending, and now a massive increase in capital gains tax, it will be easy to argue that it could be a hugely promising scenario for precious metals owners who want to see the bull continue to run. Over the years, I feel savers have felt forced into risk assets, in other words, equities. And a lot of them have hung in there based solely on the fundamental belief in equities. But now, with all these negative economic influences layering on top of each other, I believe you're going to see a lot of people getting out of equities and going towards alternative assets like precious metals. Sure enough, after massive spending plan announcements and tax hikes by the Biden administration, and the first sign of inflation in a long time, gold and silver have been very strong so far in May. Since the beginning of this month, gold is up 6.5% and silver jumped 8.5%. All things considered, I think it's safe to believe that we could see the continued development of the ideal conditions for precious metals. For more information about what's happening in the economy and how gold and silver play a role, go to Augusta Precious Metals website and sign up for our free guide. Better yet, sign up for a one-on-one web conference with me or a member of Augusta's education team. We're here to help. This is Devlin Steele, Augusta Precious Metals, signing out. If you enjoyed this content, make sure to subscribe to our channel and check back often for more updates.